Welcome back, everyone. In this video, I'm going to be going over 2 dividend ETFs to build an awesome dividend portfolio. And when it comes to dividend investing, I think most people like myself want it all. They want great dividend growth, great dividend yield, monthly dividends, and also great diversification among holdings. So these 2 ETFs are definitely going to give all of that and more. And the first ETF is, no surprise, the Schwab US Dividend Equity ETF. The intent is to track the total return of the Dow Jones US Dividend 100 Index. And the index SCHD tracks is designed with dividends in mind. It is to measure the performance of high-yielding dividend stocks within the US with a record of consistently paying dividends, and then it further filters those stocks based on fundamental strength relative to their peers. So it not only picks high dividend stocks and also stocks that consistently pay dividends over time, but it then further filters those stocks through a series of financial ratios to pick the best of the best companies. And as far as diversification goes, the total number of holdings are currently at 103, and I believe that that is an adequate amount of diversification just with this one ETF. And you'll see that this ETF is not only diversified with the number of holdings that it has, but it's also diversified by industry as well. And now most of these industries that it is diversified into is typical among dividend ETFs and also dividend companies as a whole. Those industries that pay dividends, of course, are going to be weighted more heavily. So you're going to see things like financials, healthcare, consumer staples, industrials, and energy all above 10% of the total weighting. And then further down, you're going to see consumer discretionary, information technology, communication services, materials, and utilities at a relatively negligible amount. And quickly looking at the top 10, you do see that industry diversification, and you also see that the top 10 holdings of this ETF are all well-established companies in their own right. You're going to see things like Pfizer, AbbVie, Coca-Cola, Cisco, BlackRock, Bristol-Myers Squibb, Texas Instruments, Verizon Communications, PepsiCo, and Lockheed Martin. So quite a bit of diversification in the top 10 alone, with only the first holding being below 5% of the total weighting. And you're going to see quite the difference between ETFs, like a total market ETF like VTI, which has its top holdings in the 8 or 9% range. So this ETF does a much better weighting percentage than even something like the S&P 500. Of course, less holdings overall with only 103, but as weightings go, this ETF I think does even better than that. Let's take a quick look at the historical performance of the index this ETF tracks. So the 10-year annualized return of this ETF on average with those dividends reinvested, again, this is total return, is at 11.18%. And I think that that is great for what this ETF offers because, again, you're going to be getting that dividend growth as well with not only the yield and capital appreciation, but you're going to get dividend growth at a phenomenal rate as well. Getting into that dividend growth, it has an average 5-year dividend growth rate of 11.59%. And that is just awesome because I think that that is something like triple or even quadruple the rate of inflation typically. So your dividend growth is going to be growing far more than the rate of inflation, which I think a lot of people look for with their dividends. And you have a historical growth of 13 years. And I think the fund has only been around for something like 13 years. So every single year that this fund has existed, the dividends have increased. And you do also get a great dividend yield at 3.62%. And SCHD is amazing because it provides just by itself great diversification, great dividend yield, great dividend growth, and also the index has a 10-year annualized return of 11.18%. And what more can you really ask for? Just SCHD alone is a quality ETF, and that is part of the reason why it is one of the most popular dividend ETFs around. So how can we make this already amazing dividend ETF even better with a complement to add to a portfolio? And you have to look at what this ETF doesn't have. So even though it seemingly has it all, you need to look at things that it doesn't necessarily have and see if we can add some benefits to it. So when it comes to diversification, there is weakness when it comes to things like information technology and also other minor industries as well. But we really want to focus on this information technology thing because I think a big part of the reason why people shy away from this ETF is because it really isn't diversified into one of the most popular sectors currently. And going even further, it lacks a consistent dividend. And what I mean by that is that this ETF only pays quarterly. And I think for psychological reasons and for own personal reasons, a lot of people pay their bills monthly, so they like monthly income. This ETF doesn't necessarily do that. So we want to look for an ETF that does pay monthly as well. And dividend yield is at 3.86%, but I think dividend investors maybe even think that that yield is a little bit low. So I think we can even do higher yielding than that and pretty much take another ETF and give monthly dividends, an ETF that offers diversification into information technology, and also an ETF that does pay monthly. And now, with all that said, I think the JP Morgan and NASDAQ Equity Premium Income ETF, JEPQ or JEPQ, perfectly does all three of those things. Now, the fund description of this ETF is to generate income through a combination of selling options and investing in US large cap growth stocks designed to deliver a monthly income stream from associated option premium and stock dividends. And this is correlated with the NASDAQ 100, which is typically seen as a tech-heavy index. And we're going to get into the holdings, and you'll see how these holdings really do complement SCHD's holdings. So the top 10 holdings of this ETF, unlike SCHD, are extremely tech-heavy. You're going to see Apple, Nvidia, Microsoft, Amazon, Alphabet, Broadcom, Meta, Tesla, and Netflix. So none of the top 10 holdings of this ETF are in the top 10 holdings of SCHD. So it is great for that diversification among companies. And with this ETF, of course, as this ETF kind of tracks the NASDAQ 100, it is heavily weighted with information technology at 41.5% of the fund. And remember, SCHD only had 8.8% of the fund weighted with information technology. So that adds great industry diversification. And you also see things like consumer discretionary too, also weighted at a higher amount at 12.9%. So you get great industry diversification when you combine these two ETFs together. And from diversification, we jump right into the dividend yield. And I think that this ETF offers a very high dividend yield because the NASDAQ is seen as a more volatile index. And because it sells kind of covered calls on this index, you're going to see a much higher dividend yield. So the 30-day SEC yield is currently sitting at 11.27%, which greatly increases the dividend yield of your hypothetical 2 ETF portfolio, with SCHD only hovering around about 3.8%. So if you hold 50% SCHD and 50% JEPQ, you get a dividend yield probably around the 7 to 8% range, which is a great dividend yield for your portfolio. And of course, this is going to change a little bit because part of the way that this ETF generates its income is through options, and options premium is volatile based on market volatility. But overall, you are going to see higher dividend yield with this ETF, even with lower volatility environments. And the other final part that this ETF adds is a monthly dividend. You see that this ETF pays monthly around the first week of every single month. So unlike SCHD, which pays quarterly, with this ETF, you're going to be getting income every single month. Let me know in the comment section below if you do think that this dividend portfolio combination is great. I think it is because, again, it offers great diversification, dividend growth, dividend yield, and also a monthly income. Please remember, if you did enjoy this content, leave this video a like to get this content out there to a wider audience, and also subscribe for future content. And I will catch you all in the next video.